Okay, let's dive right into this. Welcome to The Explainer. Today, we're unpacking a genuinely fascinating piece of investigative reporting, and it sets up a classic real world political mystery. We're going to play detective a bit and follow the money right to the heart of New York's latest tax debate. Whether you're a total political junkie or just kind of curious about how campaign finance actually shapes the policies we live with every day, this source analysis gives us an incredible look behind the curtain. We'll be checking out some wild polling numbers, digging into the nuts and bolts of a proposed tax plan, and of course, following a trail of serious, high-dollar donations to see exactly what the source material uncovers. Let's get into it. So, right out of the gate, our source frames this absolutely central paradox. I want you to imagine for a second that you're an elected official. Your main job, obviously, is to represent your constituents, right? And usually, that means championing the exact things they are enthusiastically asking for. So why on earth would a politician firmly, openly oppose a bill that the vast majority of their own constituents actively want passed? I mean, it seems completely counterintuitive to political survival. Let's take a look at exactly how stark this contrast really is. Now, what's really interesting about this slide is the sheer gap between the policy itself and the politician. Over on the left, you can see this staggering wave of support for State Assemblyman Zoran Mamdani's tax plan. We are literally talking about a policy that's supported by 72% of Democrats, 62% of all New York City voters, and even a solid 54% majority of voters statewide. It's incredibly popular. But then, look over on the right. You have New York Governor Kathy Hochul's overall approval rating sitting at just 46%. It is incredibly rare to find a policy broadly supported like this, and yet the governor is actively pushing back against it. Which brings us to Section 1, a popular tax proposal and the polling paradox. Okay, so what is actually at stake here? And why is there such a massive disconnect? To understand the hype, we have to look at the literal bottom line. $1.75 billion. That's the estimated annual revenue the city would raise from Mamdani's proposed tax hikes. That is an absolutely transformative amount of capital for a city budget. I mean, we're talking about major potential funding for vital services, infrastructure, you name it. It's pretty easy to see why everyday voters are getting so excited about that kind of massive revenue influx. So now the paradox really comes into sharp focus for us. On one side, you have this golden ticket for public funding, a tax plan that raises billions and has overwhelming voter approval. But on the other side, you've got a governor who's banking on a re-election campaign, yet firmly opposing the bill. The source asks a completely logical question here. Why wouldn't a candidate who really needs a re-election boost support a policy that the vast majority of her own supporters clearly want? Let's move right into Section 2, following the campaign money and the major players. To figure out why the governor might be opposing this, the source analysis tells us we need to switch gears. If the voters aren't the ones driving the opposition, well, who is? So the crucial point is this specific dollar amount, $175,000. Now, in the realm of individual state-level campaign contributions, that is a massive figure. According to the investigation, this represents the single largest donation to the governor's campaign. And as we'll see, the source of this money is incredibly revealing when you look at who would actually be impacted by the proposed tax. That giant check, it comes from the Rudin family. The report notes they're the owners of 345 Park Avenue, which is a building so massive it literally has its own zip code. As a hugely prominent New York City family with a multi-billion-dollar net worth and holding the title of the governor's top donors, the source suggests they have a very obvious vested financial interest in preventing Mamdani's tax plan from succeeding. But, they aren't the only heavy hitters involved here. Actually, let's look at an even more staggering number, $25 billion. Now, this isn't a campaign donation. This is the reported revenue from just last year for the Americas region of a single corporate entity. An entity that, as it turns out, also happens to have a very close relationship with the governor's campaign war chest. That massive revenue belongs to PricewaterhouseCoopers, or PwC. You might remember them as the accounting firm tied to that infamous Moonlight and La La Land envelope mix-up at the Oscars a few years back. But more importantly for this explainer, the source identifies PwC as the third largest donor to the governor. The report really connects the dots here. With immense revenues of $25 billion, PwC is operating as a major donor that is highly motivated to avoid an added corporate tax burden, allegedly pushing the governor to vote no. And that brings us to Section 3, breaking down the tax and the financial motive. Okay, so we know who the major players are, and we know they have a lot of capital. Let's dive into the nuts and bolts of this proposed tax to see what the bill actually does. This first part of Mamdani's proposal directly targets top earners. As we can see, it proposes a 2 percentage point increase on income in excess of $1 million. So the rate would move from the current 3.88% up to 5.88%. It might sound like a pretty small shift on paper, but when you apply that to massive wealth, the real-world dollar amount becomes seriously significant. And this brilliantly illustrates the real-world impact. To put that hike into practical terms, the source breaks down the math for us. If you made $3.5 million a year, this 2% hike would equal an extra $50,000 in taxes. What's super fascinating here is the context the report adds. It points out that this exact amount, that $50,000, was roughly the size of a recent tax break granted to these exact income brackets under the previous federal Trump administration. So this local tax would essentially just be recouping that specific federal break. Now, the second half of the proposal targets business entities. The plan would increase taxes on the city's corporations by 1.8 percentage points and on unincorporated businesses, like local partnerships, by 0.4 percentage points. This is the exact mechanism that the source points out would financially hit corporate giants like PwC. And that really explains their reported motivation to lobby against the bill's passage. Section 4. The lobbying pushback and the shielded campaign. So, how do these financial motives actually translate into coordinated political action? Because it's not just about writing a direct campaign check to a candidate. It's about funding a much broader, highly sophisticated effort. The report highlights this eye-popping figure, $10 million. This is the budget for a brand new, highly coordinated campaign that was launched with one specific objective: to take down Mamdani's tax proposal before it can become law. That is a massive war chest, dedicated entirely to stopping a single piece of popular legislation. The organization pulling the strings on this massive pushback is called the Coalition for New York's Future. The source defines them as the lobbying and political arm of the Partnership for New York City. And, crucially, the investigation reveals that many of the governor's absolute top real estate and finance donors are the exact same entities bankrolling this very coalition. Let's move to and see how this builds a picture of systemic influence. The source lists some of the coalition's known past donors. And look at this. We see William Rudin again, tying right back to our top donor spot. We see corporate giants like Pfizer and JP Morgan, and powerful individuals like Steve Ratner. It paints a really undeniable link between big finance, big real estate, and organized political lobbying. But there is a huge catch regarding how much they are actually spending right now. I want to read this quote directly from the source material because it's absolutely vital to understanding how this operates. Quote, "They don't have to disclose that information, and the group recently took steps to further shield the names of their big money funders." End quote. Because this coalition operates as a nonprofit, they benefit from dark money loopholes. They have a deliberate lack of transparency, meaning we, the public, cannot see the exact current donation amounts that are funding this $10 million opposition campaign. So the source report brings it all together to summarize this incredible web of influence. The investigation found that at least 8 of the governor's absolute largest campaign contributors are large New York City real estate families. These are families whose vast corporate revenues and personal incomes would be directly hit by the Mamdani tax proposal. The dots are thoroughly connected here between their financial exposure, their shielded lobbying efforts, and the governor's steadfast opposition to a bill that her own constituents actively want. Which leaves us with this, frankly, provocative question derived from the explainer today. How much does unseen campaign finance ultimately decide the fate of incredibly popular policies? When 72% of a party wants something, but an exclusive group of top-tier donors vehemently opposes, whose voice actually carries more weight in the halls of power? It's a huge question about the broader implications of wealth on our democratic process. Take some time to reflect on the evidence we looked at today, and as always, keep following the money.